good afternoon to everyone, and thank you for choosing to spend your afternoon here with us. For those who don't know, I'm Patricia Ogun-Faber, and I do a podcast show to help people maximise property values. It's called Maximising Property Values, and it's on all the popular platforms: Apple, Spotify, Google, Audible, etc. That, however, usually is a monologue. But I've now added a guest series, and my guest today is Colin Davison. We are going to try to get to know Colin a bit more than we already do. So, who is Colin? Colin is an entrepreneur. He's a faculty member of the Chartered Accountants, and he's a property business advisor and a tax consultant. Colin, welcome to Maximising Property Values. But before we go into your main activities, we would like to get to know you better by you answering some questions which you don't know what they are. So I've got two and a half questions for you. So the first one is this: what's the most challenging thing that you've ever been asked to do for an accounting client? And the halfy bit to your questions is, how did you deal with it? So over to you. Then once you've answered, I'll go on to your second question.
Wow, the most challenging thing I think is essentially is the raising finance part. It's also the most rewarding part. So I've been party to some small syndicate groups, up to about 30 investors in Eastern Europe, Romania being one country, Bulgaria being another, and although the Poland as well. So the challenging, of course, is having to think outside the normal box in delivering pure accountancy and tax work, and actually being able to assist those clients and those syndicates have an established way to find where their investors are, and that is that's never always easy, but having to explain to someone what properties there are, and having to trust someone that is with a large sum of money for something which they may not get to ever see, and with other risks that are attached to property investment. So in terms of accounts, I guess the stuff that I do every day, we've the challenges over the years become less so. My challenges are more personal, I suppose, than pure accounting and tax work. But there has been some challenging investigations and sitting in front of tribunals to represent taxpayers, and so there's been elements of those, and they've certainly had an element of challenge too. And where I wish I was more of a lawyer at times, Peter, to be able to make sure you got the papers in order and you got your evidence that support your clients' actions or inactions to what they're being faced with. So there's certainly been challenges of that nature as well.
Wow. Thank you. That actually sounds, to me, quite stressful, because even when I practiced law and I used to go to tribunal all the time, every single time that I sat in front of, the chairperson, I would be beset, with nerves. And I found it very stressful. I did it, it was my job. But I can't imagine somebody who's not, legally trained and who doesn't do it that regularly actually, coping with it. So, kudos to you, well done. Okay, so, but how do you actually, did it make you nervous? Did it stress you out? If so, how did you actually overcome any nerves and or stress? That's if you experienced that at all.
Yeah, the second question is redundant, because the first one is, I guess I don't think I'm immune to stress, but I don't recognize it, or it's not something which is concerns me. You can only do what you can do at each stage as well as you can, and you have control over yourself. and stress is probably, my view, a feeling of not being in control. And therefore, if you you know what you can do yourself and know what you can do is positive and supportive, then stress doesn't really come into it. I guess that's my view. One, yeah, I mean, to manage what I do manage, most people would go, that's something which is quite scary. Most recent acquisitions, and the first time ever that I've got a second charge on my home. For a lot of people, having 75% of their total property value, which for me is probably the first time since probably first time ever, not even the first house I bought had a higher debt. And when the value of the property is, goodness, dare I say, 20 times my first home was probably bought for, then that amount of debt at 75% is quite a significant figure. And the conversations we had this morning about maybe the good times are at some point going to end. Of course they are. So nothing lasts forever. Yeah, that there's probably elements for most people would find that quite stressful, and I just would take the view that you do what you can. Every step you make is a positive one, and it is what it is. Stress shouldn't be part of what you shouldn't affect you.
Wow, that is mindset. And that is evidence, to my mind anyway, of a very, very strong mind. Because my middle name is Stress. So when people ask me what my middle name is, and I say I don't use one, they probably can't see into my head to see that I'm just laughing my head off, thinking, if I actually told you that, the name that I've named myself, middle name, is Stress, they'd really think that I was going crazy. But so good, good for you. Okay, great stuff. Now, so your second question, slightly different, but we are going to come back to some of the things that you've spoken about, because it's all about, people getting to know you, because I know that you've got so much that you can offer people. And sometimes when people get to know you a little bit better, they feel a little bit more confident about reaching out and actually seeing what you can offer them that can help their journeys, that can help their businesses. So I'm hoping that we can get to show a little bit more about you. And you've given me so much in that first answer. I can't but come back to it. So I'm going to park it for a moment, and then I'll come back to it in a little bit. But your second question, or your two and a half, that one is, what's been the happiest time of your life and what brought it about? So again, actually, that's another question and a half. So I guess you've got three questions. So what's been the happiest time of your life, in your life to date, and what brought it about?
Happiest time for me, wow, I love the questions and how they can presented. I think, I mean, who's not going to answer that is not child related. So I think, I don't think I will be any different in answering that. But obviously, in my case, it's those four happy times, rather than maybe some other people only have experienced one or two in their life. So yeah, my move to Hook, first proper sized house, and yeah, with two children, and the third one was being planned. That was certainly a very happy time, and those good days of traveling on business, and I was building the business up. That was a really exciting time for me, with Cranley's going from strength to strength, and employing people in the background from day one to do support me with some of the tasks that I had to do. At the same time, was working in, I remember within a few months of moving to that location, I was back in the days of having financial contracts, where I managed to sort of bridge the gap between an audit, finance, and tax role that, don't know how it kind of existed, but it was really quite interesting for me, working a stone's throw from Zaventem Airport. So it was a fairly long morning commute on a Monday, sometimes on Sunday evening via plane, train, or I eventually did it by car. And the nice thing about it, of course, in those days was the tax system was so much kinder for contractors. And there's got to be a happiness element to being some financial. And the nice thing about financial is I was able to put 10k for somebody in the mid-20s, been able to put 10k a month aside against their much larger mortgage. And I probably, before I started my property portfolio, within a year or two of that happening, my debt on my main home was down to zero. So I've gone from a completely different position I am today. But that was before I started properly in property investment. I had two properties at that point, but it wasn't really a proper setup. So prior to 2007, I paid off that mortgage and was very comfortable, happy position to be at.
Wow. Even more. So you've gone from not having a mortgage at all to having a second charge on your home and having a 75% loan to value debt ratio on your home. Now, okay, without giving any specifics that you're not comfortable giving, can you just share with us the motivation behind moving from one end of the scale, which is like zero debt, to where you are now, and how that might actually help other people who might be thinking about doing a similar thing? Obviously, we're not saying people should go and do it, but if they're thinking about it and they want to go and get further professional advice, or think about it a bit more, is there anything that you can say that helped you through that process that you think might also help other people?
Yeah, lots of components to this, and so if I can address them all. I've always been someone that has been very cautious, and I think that the situation that I started out with was obviously wanting one of a safety net. I wanted to make sure that my own home was very safe, and as the properties have developed and as opportunities are there, and as I got more confidence in the marketplace, and having a multiple income stream really is important behind this, so that by having more properties, by having more clients, by having a greater number of smaller transactions, you have less risk. Risk is about variability in your returns. When you study the subject, it's measured in something if anyone did A-level maths, you would have come across the concept of standard deviation, which is basically the movement around a normal figure, an average figure. And you want to try to reduce that. And the best way of reducing it, and having the word portfolio theory, is that you have 20 or more properties, 20 or more income streams. You will never have anything which is dominating. So by having a more established portfolio and a more robust and much less risky one, you are able to take greater debt levels. So because you have less variability in your return. So I was actually in a much riskier scenario back then, because I had one contract. My jobs were very short and part of my life. So I had one contract. Admittedly, I had at that point, probably 30 to 40 accountancy clients that would have had a background income of a similar figure in thousands, but which in itself wasn't insignificant, but certainly wasn't a massive driver to things. And so to answer your question, that you just got to look at overall position, and the quicker you move into one source of income, and people that only have a handful of HMOs, handful of buy-to-lets, they are in a much riskier position than somebody that's got a bigger portfolio, because of that scenario. So that is really where the change happened. And I was always a big advocate for telling people that, but I was also more cautious than my words to encourage people to do other things were sometimes a lot more cautious than I was as a person. But yeah, having a portfolio really, really matters, because it enables you to springboard future opportunities which otherwise would not be possible.
Okay, so great that you are now taking your own advice. So you've been advising people to do this for years, but now you are doing it yourself. Now,
I'm a
can I just
laggard
ask
in
you?
a sense, because yes, I know I have achieved a lot, but I've been very much a laggard to achieve that. I can assure you. I was promoting that's, you know, an accountancy system, which is fantastic, and I knew for well I would moving on to it, but boy, did I not want to have that headache and that chore. So it took me 5 years before I moved over to it. So yes, I eventually follow my own advice.
Wow. So when you talk about variability, and and it makes perfect sense, even though I didn't do A level maths and I hate figures, so I'm not a figures person at all of that made perfect sense to me. But so when people have, say, 20 or more properties, so you do mean 20 or more properties, or do you mean 20 or more letting streams? Because, say, for instance, somebody's got, let me think, say somebody's got a 10-room HMO and they've got two of those, they will have 20 sources of income per month. Or do you actually mean, if, say, like, they're an HMO person, they should have 20 of those?
Yeah,
What
good.
is it that you would actually advise?
Yeah, I mean, the portfolio theory is such that it can be 20 forms of income stream. So it doesn't have to be properties, it doesn't have to be assets. It could be, a number of sources of things. That you could be a trader and have 20 pitches in which you sell your fish and chips in a van. The versus one that you, so it can mean different things depending on what business you're doing. It doesn't necessarily mean 20 properties. Obviously, in the context of a buy-to-let investor that earns only from renting their own properties, then it would mean 20 different properties. But you could be someone who does rent to rent, and you could rent out to four properties with 5 bedrooms in, and that will then achieve your 20 that way.
Great stuff. So would you then add to the number 20 another factor, say, for instance, diversity? So if somebody has 20 HMO rooms, let's say, for instance, would you say that they are that they're able to mitigate the risks in their business? Or would you advise that they have maybe a minimum of, I don't know what the number might be, different strategies within their portfolio? Because I'm thinking maybe that might be a good idea, but I don't know. I'm not a numbers person, and I'm just wondering if you can maybe help people, and myself actually included, by sharing your thoughts on this with us.
Yeah, I mean, diversity is an interesting component, because obviously if you keep going for something new, then the danger of, so this is really classic sort of GCSE business studies. At what point should a business diversify? It is obviously to reduce risk reliance upon one industry sector. It could be diversification in terms of being in one geographic area. It could be diversification in terms of, if you've got 18 buy-to-let properties, maybe your next one should be an HMO or a holiday let or a service accommodation. So I mean, obviously, you've got to weigh that up with learning something new and the stress value that you may have in terms of adopting that and integrating that into your existing processes, and more importantly, your management time, because there's only one of you, and you can only exchange your time for so many service hours to support other people. And that is essentially where I've been very much focused on, in that I do realize that I've always wanted to ensure that anything I do is an absolute minimal impact on my time. And that's where diversification will be something you need to manage carefully. Otherwise, you'll end up being a very busy fool, maybe a very wealthy one. But if you spread yourself too thinly, then you don't always, it's not always a very good message to send out to someone. But diversification as a whole, should work and needs to be there, but it's not going to be for everybody.
a very rich fool. That is still making me chuckle. So, Colin, you, is this a service that you might be able to offer people? So, oh, and by the way, I'm not able to pin your links. I don't know if you're able to. I don't know if there's something to do with my system. So if you're able to, do please pin it. So people in the room, today we are getting to listen to Colin Davison, and he has so much to offer. Hopefully, we'll get a link in a moment. But if not, I will read out some of his social media handles to you so that you can actually go and visit them yourself. I do have a problem, I think, actually, with my setup, because it's not allowing me to pin anything literally apart from my stuff. But I shall carry on trying. Um, so so yeah, is this something where you can actually offer people assistance? Because lots of people hear things, and people, I think, and quite rightly so, feel that perhaps they don't have all of the information and or knowledge to actually do it themselves, and that is when they reach out to other people who do have the information and the knowledge and the time to actually help them, either through mentorship or just having a chat with them, or meeting up with them, or having dinner with them, whatever it is that people choose to, or however people choose to actually spread and share their expertise. So how would you do that, Colin? First of all, do you offer that kind of assistance? And if you do, how can people reach you if it's something that they need in their businesses?
Yeah, so yes, we do. And to reach me would be to listening on a podcast. You want me to ping on this is essentially to take a note of my mobile number and or email address. I'm ashamed to admit that the focus on a website has not been high up my priority list to recreate it, having had it before. And someone decided to muck around with the settings, so we don't have currently a practice website, which I'm ashamed to admit. So effectively, you can reach me very easily through a landline of Basingstoke 01256 830000, and that's can be picked up by various people.
Sorry,
And
can you just repeat that,
yeah,
Colin?
01256 830000. I could ping the link up on top to my social handles, but and I can now do that with the mod status. So let me do that in a short while. But yes, we and how do we help people? Well, essentially, uh, there is a call the time with me. What you like. Some people have a package that is only one meeting, and then they choose to meet up with me and go out for lunch or something like that, and then they can get an insight to what they do. Other people like a more formal format of having quarterly or a monthly meeting to connected with anything from tax accounts, business direction, anything could be called consulting. And I don't really like to call it mentoring or training, because obviously those things are offered by others and in a much more formal capacity. It's a soundboard, and a soundboard that is a very open and honest response and saying, look, I think you could do better in this by understanding someone. I do offer psychometric testing, which again also helps me pinpoint somebody's strength. Which which is obviously sometimes they don't always know, and more importantly, and the biggest thing I think I offer is the ability for someone to be inspired and help them in a direction. What I have is a limit on what I've done. What I've got a much bigger open book on is what other people are doing. Now, obviously, there's an element of thinking I can't obviously share business confidential matters, but equally there's a lot of generic things that I learn from other people doing what they're doing, and it's only there those concepts and ideas are cannot be patented, and nor would necessarily anyone want to refer to that. But so I can share best practice with others, which I think is a really useful way for people to learn. Yeah, there's my image getting a landlord show with receiving an award from Craig, one of the first Big Brother things, and also a well-known landlord. Met him at a few Screwfix events in the last few years, actually, in Farnborough. But
Ooh.
yes.
Okay, great stuff. So, for people who are going to be listening to this on the podcast, you can also reach Colin. So his Instagram username is Colin, COLIN .A for Apple, Davison, DAVISON. And his LinkedIn profile is, once you get to LinkedIn, you just want Colin Davison, all one word. So www.linkedin.com/Colin Davison. So, Colin, let's go back to you having clients in Romania and some of the other, Baltic countries and, countries not, outside of the UK. How are you finding all the anti-money laundering rules and regulations, relating to kind of like, dealing with foreigners? Well, I guess they apply to people in this country, but
So
even
these,
more
yeah,
so.
so these are all investors which are either UK or Irish investors. The way the Irish accountants work is something which I really adore, and I'd like to replicate here. It's very, very common for every Irish accountant to effectively running an investment club, and that I do like that kind of concept. So it's very different to how things operate in the UK. But that's where the AML checks are being carried out with, but the investments themselves, the actual properties, obviously are being handled through solicitors in those countries, and they're making sure that what we're buying, plots of land, they are who they say they are. Those activities, I have to say, although there's something I was doing at the time, they I don't have any of those at the syndicates investing in large offices in cities around the UK for conversion for student accommodation, etc. But nothing at this point that is overseas. That kind of era has dropped off.
Okay. And just before we kind of like, park that to one side, for the benefit of people who might not know what an investors club is, can you just, just clarify that a bit so
Yeah,
that,
so
people a
essentially
bit more
it's
insight?
like it's just a syndicate where you get people together. It's a network that accountants in very using it Ireland as an they have a good example, good example of that, where you effectively group together people with money, and you put to see where we put together what they're looking for from an investment, and then you look at opportunities that address that, and it's nothing more than a club highlighting opportunities, and then when people have then got the opportunity that's right, then they then then they put together a company that everyone becomes an investor in that company, and invest in that property opportunity.
Great stuff. So again, just to reiterate, if people want to get in touch with Colin, people on the podcast, there is a phone number that you can use, and it's 01256 830000. So coming back to multiple income streams. Oh, now we all love to hear that. What at the moment in the UK, so we are recording this in March of 2022, what of the property strategies, so putting your other businesses to one side, just looking at properties, what and which of them in the property strategies are you more in favour of today? if you can just maybe like tell us two that you think are good strategies to be considering, and why you think they're good strategies to be considering. Thank you.
Yeah, and I'm been an advocate for least effort, maximum reward, and because of that is that I value and still want to continue, and with my accountancy work, and that's always been a number one criteria. I never wanted to take away that component of time that I spend with my clients building that. So therefore, those the strategies at the moment, obviously subject changes that could happen. The number one would therefore be accommodation opportunity for people, and the second would be the HMO, which is again the whole concept of a portfolio. You can get a multiple number of tenants with a relatively smaller investment in the one property. So that is the two that I would be saying are good to go for. And of course, those are two opportunities that you could do with the idea of a rental, which is rent to rent as an opportunity. So that would be a key criteria for it and they're both higher incomes, because let's face it, the number of squeezes on a return for an investor, particularly if the investor was investing in own name, are ever increasingly challenging for investors to work with. So you have to look at higher income opportunities anyway. So those two.
Fabulous. Now, I think I know that service accommodation is considered to be a business by HMRC. Are there any arguments that you see that HMO people might be able to put to HMRC, in the near future, to say that running an HMO is also a business and not a property investment, as HMRC likes to put all property investors into?
Yeah, very, very interesting question. At what point does any? I mean, it is bizarre in the sense that in order to incorporate, you need the tax lawyers out there have been informed that we can run 6 properties, and that then is deemed to be a business. And for the purposes of incorporating your business, you're able to qualify that, so you can have 6 buy to lets, and yet you could have a property with 6 residents in it in 6 different rooms, and it doesn't qualify to be the same. So that is utterly bizarre. So what obviously, what is trade versus investment? It comes down to time. It comes down to your share of your activities and profits regarding that, and obviously how easy it is to earn without putting the components of a decision making to it, and running a holiday let business which involves meeting and greeting and swimming pool maintenance, whatever. It would be a trade. You've got activities going on. I guess it's also about the transitions. So it's how often does people come and go, and you can easily have. Would it be fair to say that somebody had 5 rooms and someone stays in their average of 6 months? Is that really a lot of time that it should be taking versus not? So I think it's an interesting component. I suspect the way that we will probably see whether if the government was concerned about the rise in the SDA market, but doesn't clearly want to be harming hotels or others, that we will possibly see an increase squeeze on taxes in respect of those the squeeze on HMOs as well. But anything which is 28 days or less will be deemed to be a service, because it's providing short-term accommodation, and anything above that, it's that. So I wouldn't at this point, given the legislation is so tightly defined, isn't it? The argument for trying to present something else would be a little bit futile to mention.
Right. Okay. Well, people like me will always live in hope. Um, and I think there's a part of me that's actually looking forward to having an argument with HMRC, but, who knows? Perhaps, let sleeping dogs lie. So you spoke now about incorporation. Now, that is also a service that you offer to people who want to move their portfolio from their individual names into a company. Are you able to, tell us a bit more about it? Not so much, everything that makes it work or might make it work, but just a little bit to enable people to understand what the issue is, how this may resolve that issue, and what roadblocks might be in the way of the whole thing altogether. Thank you.
Yeah. So the since 2016, when stamp duty had a premium, there are a number of tax issues which are making it more challenging for an everyday investor. And Section 24 that was introduced that time, we have um, a situation whereby the income to which you're taxed on is essentially taxed on a higher figure than the cash flow that you're generating. So you're not fully deducted for the interest that you've incurred when it is in your own name, or when and it's a residential property. For a commercial property, or when it's in a commercial vehicle like a limited company, those criteria, those rules do not apply. So therefore, for a lot of people, it is appealing and attractive to be either initially set up as a limited company and pay a small premium on your interest in the first place, or look at incorporating from having from your own name into a limited company, going for all that. So that's something which the transition generally is that you have a partnership or an LLP that is going from your own name to the partnership through a deed of trust, which is a document that kind of indicates that the beneficial interest is transferred from your own name to that new entity. And then, provided there has been at least two tax years, and other people in the past have said 3, you then can then incorporate into a new fresh limited company. And the various reliefs at each of those 2 stages, from own name to partnership, from partnership to limited, mean that you're stamp duty exempt and your capital gains tax exempt. Effectively, the gain that you're making on those transfers is then rolled into your shares, and until you sell those shares, you will not be releasing that gain. That does mean that you can equally sell the properties, and those properties would then be assessed on the incorporation value that was set on that day of that company being incorporated. And anything, a bit like with probate, you're resetting the clock on the potential gain and growth. So that is in a quick nutshell how things, the process behind it, and the benefit there. Therefore, going long term is that you can then facilitate and have fully relieved deductions for the interest that you're suffering. And in the case of someone myself, that there would be a figure of cash flow being a figure, let's call it A, and then you might have you're being assessed on, in my case is 3 times that. So it was very, very obvious that anyone that was incurring that in any shape or form would be paying tax on a figure greater, and in my case far greater, than the cash flow which it otherwise would be generating, because it was always reasonably highly geared in order for me to facilitate and get the growth from the portfolio, and also fairly high geared in that because the flats that were purchased, certainly in this area, that were relatively new, some of which were bought through repoed, never really went up in value, and even so therefore there was always a crunch point, is that the monies that were generated from our trading activities were going into deposits to fund the portfolio, but the portfolio was never really repaying it back in capital, and was only effectively repaying it through income. Hence the reason why I also need to move to short-term accommodation, because that was one quick way to facilitate and look at higher returns to also counter those tax issues. So that's been a big part of the transaction. So hope that's given a bit of an insight. Probably not completely answered. If you've got any more subsidy.
Well, no, that's no. I think most people who've listened to that will understand it completely. So when you say Section 24, that's Section 24 of the Finance Act 2015, isn't it? That came into effect in 2017, I think. But do you know what? Just listening to you, you literally took me back to my tax lawyer days, and I was thinking, do you know what, there are so many opportunities for tax planning in this, so many opportunities, but obviously I don't practice tax anymore. But it just sounds so exciting. And like you say, how can you be paying tax on 3A when A is the income that's coming in? That's a recipe for bankruptcy or insolvency. So some things are just complete no-brainers. So again, this is a service, isn't it, that you offer to people. So again, just to remind people, if you didn't write the number down and you're listening on the podcast, and I hope you've got a pen, and if you haven't got a pen, go and get one after this, because we will repeat this number again and you will have another opportunity to write it down. But if you have got a pen, the number is 01256 830000, and that is a number on which you can contact Colin if you want to have a discussion with him about how you might be able to look at what you're doing and make it a bit more tax efficient. So Colin, we've spoken about a number of ways in which you can actually help people, and in which you actually do help people. Are there any other ways that you can assist? This is mainly a property thing, but anyone really, where you can actually assist them, that we haven't already spoken about. And also, I'd like you, if you can, and if you can think of any, to kind of throw out two maybe tips for property investors as to what they can do in order to streamline their taxes and make their businesses more tax efficient.
Okay, I will come up with the two tips first. Can help. So I think being organized is a really, really important component, because we all like to nobody, including myself, want to spend time putting figures together and understanding what you've paid for, when it was, and back in the distant past. So therefore, pretty much any system out there offers an online system direct from your bank, and then it's something which can be looked at really randomly in different times of the day, the week, and easier for you to recall what you did a couple of days ago. Because if you're like me, if you did it monthly, then you forget what you did last month, and it becomes more of a challenge to get those processes done. So make sure you are organised for your finances is the number one tip. And two is really know yourself. I mean, we not many I've dealt with many accountants that are very strong and support and understand human psychology, and psychometric tests are a key component to understanding people. And I don't necessarily roll those out for people to sort of an onboarding process behind supporting people, but I can get a lot from to people generally about what their hopes, fears, and their strengths are, to deliver, and focus, therefore on your strengths, because no one can take that component away from you. And the more you become a niche provider in amongst a team, the prouder the more you begin doing anything that you love and enjoy, and you won't be doing things that you don't enjoy. And hopefully you find a team of people who are doing things which they also love and enjoy, and then you've got a very happy team, and also a very successful team. So those are the two components to what I wish to highlight as a tips. And as to services, for I mean, I again, about being efficient in time, I like to be offering services which effectively are there for people's um, comfort and value. That we do the bog standard boring stuff that other accountants do, which is getting numbers generated for people and ensuring that their taxes are made in an efficient manner. And that is what we always will do as our focal point. I don't want to be singing and dancing and offering something which would then require a big component of my time. I can personally but I've also got to limit my time. And obviously, partly being in business was to not exchange my time for money. And if I was to be too niche and specialist and not bog standard, and providing a volume of support for people that want 99% of what we do, then it would start to fall onto my time. And then guess what? I would then not be able to provide that service and support that I would want to do. Having said that, and I can only do one per day, given the locations I often to go to, although it can be one portfolio per day if it's several properties in one location. Is I do capital allowance surveys. So at one point I was going to be registering for as a RICS associate. It's something which you can anyone could do. I actually would encourage people to do it. A bit like, if it's probably a stage above being an associate of landlords. If you value property management, either commercial or residential, then why not go and become an associate of RICS? Because not everyone can do it based on what background or qualification they've done before it, but it was certainly an opportunity that I was going to do. Instead, I obviously follow the sort of standard books that accountants can follow in doing capital allowance surveys. So that is inspecting properties. Generally, all of these have been for holiday and short-term accommodation use, and to value what integral features are in a property, with a view to ensuring that they are measured correctly and recorded and banked and logged against the a respective purchase and respect and of a property. And that's the possibly the biggest thing I do. But I just love to support and people in any shape or form. And there aren't many people that don't come away and thinking, well, that was good value, helping people in a direction in a new business that's or an existing business that's a bit stuck. Or a big component is people that have got something of value and really want to maximize their sales potential. I wrote several books. Admittedly, a lot of them haven't got published for a reason of me trusting people to do it at the time, publishers. But one was called Sold, and the number of people that sell businesses by almost selling to their competitor, or selling to a me too of someone who's in their position 20 years ago, and they sell to the next person to do that, and they're never going to they get their properties, they get their businesses sold, or their but they don't really get their full value. And really, when you look at where maximum values from a business is, it's about people that are selling businesses in related activities. So not a direct competitor, but maybe if you're a supplier in a school of books, and you may be a suitable acquirer to your business, maybe the sell at the a supplier of sports equipment to schools, because there is then the opportunity for diversification, same client base, and it becomes much easier to do that. And the same thing can apply to property businesses as well. So yeah, that's another area which I'm a keen advocate for people maximising their potential. Back to you.
Thank you. So you've mentioned a number of times that you do these psychometric tests. Is there any particular one that you favour? Because there are a few of them out there, and whether or not they differ from one to the other, I don't know. But is there one that you particularly like? And if there is, can you tell us about it? If it's free, if it's chargeable, and if so, roughly how much and why you prefer that particular one to all the others that might be on the market?
The one I favoured, the one I started out with, originally came across when we first, a year or two after we first met, Patricia, which was on a site called Academy, met up with Thomas Power in Farnham, and we've been followers of each other, supported his business from way back, and it's been one that's kind of stuck with me. That Myers-Briggs is something which is also very good. It's free. Wealth Dynamics there's a small charge associated with that, but you can actually identify the different. There's 8 profiles, and you can probably be an offer of sorry, I'm getting sidetracked there. Essentially there are chargeable services out there, but you can identify yourself, or other people can talk about the different components, and go from there. But so yeah, I wouldn't be signing up to any big fees to understand how you are, and sometimes you can identify yourself relatively easily.
Thank you. So, people in the room, if you want to click on Colin's link to find out, a bit more about what he does, please do so. It's been, for me anyway, fascinating, hearing about, some of the reasons why certain things are done. So, for instance, I wasn't aware that, HMRC says that if you have 6 buy-to-let properties, then you can be treated as a business. So, we live and we learn. And I just love what, Colin has shared today. But, for people who are at home with their pens and pencils ready, phone number for Colin, 01256 830000. And, Colin, I really just want to thank you for being here, for sharing what you have shared with us. Regarding the podcast, if you like it, please do review it, and please do subscribe. And if you don't like it, again, please let me know. Any feedback is always good. So I welcome, any comments that you might have. And, on that note, I literally want to say, Colin, thank you very much for being, here with us. Next week, we've got another colleague of mine, Louise Felstead. So again, you don't want to miss what she's going to be saying. And, I just want to wish everyone a very, very happy day.